Good morning, student. My name is Vinay Gawas. I am the teacher trainee of Viva S College, Kankavli. We have already discussed in the previous two classes about the concept of accounting. It is more of a theory lectures. Now we are beginning with the practical knowledge. Okay, so in order to get the answer to the solution of this problem or illustration, we have to know about the concept of accounting that we have already discussed. So today we are discussing about the illustrations based on the same concept. So in order to know to get the answer, we have to and detailed know the details about the concept, and we have to apply the methods in order to get the answer. The concept of account, debit and credit. One must get conversant with this term before embarking to learn actual record keeping based on the rules. An account is defined as a summarized record of transaction related to a person or a thing. Example: when a business deal with the customers and the supplier, each of the customer and the supplier will be the separate account. You know that each one of us is identified as a separate account by the bank when we open the account with them. The account is also related to the things, both the tangible and intangible. Example: land, building, equipment, brand, value, trademarks, etc. are some of the things. When the business transaction happens, one has to identify the accounts that will be affected by it and then apply the rules to decide the accounting treatment. Typically, an account is expressed as the statement of the form of English letter T. It has a two side. The left hand side and is called a debit side, and the right hand side is called a credit side. The debit is connoted as a DR and a credit by CR. The conventions to write the debit and the credit label on the both side as shown below. Please see the following example. The cash account is shown on the left hand side. It is called as a debit side, and the right hand side it is called as a credit side. Each side of the account will show a similar effect so that one can easily take total of both the sides and find out the difference between the two. Such difference in the two sides of an account is called as a balance. If the total debit side is more than the credit side, the balance is called as a debit balance, and if the total credit side is more than the debit side, then it is called as a credit balance. If the debit and the credit side are equal, the account will show nil balance. Please grasp this very well, as this will enable you to interrupt these balances, which is important. Before going in detail about these problems, we will first know about a basic concept. What do you mean by a business? A business is an economic activity undertaken with the motive of earning the profit and maximize the wealth of the owner. The business may be a sole proprietorship, partnership, or the body corporate. The success of any business depends on how efficiently and effectively these resources are managed. Resources are not free, and thus one must be careful to keep an eye on the cost of acquiring them as well. The basic purpose of a business is to make a profit. Second concept is bookkeeping. The most common definition of a bookkeeping is given by the J.R. Batley Boy as bookkeeping is an art of recording of business transaction in a set of book. Only the transaction expressed in terms of money will be found place in the books of account. Transaction, it means the business activity which involved the exchange of money or the money's worth between the parties. Example: purchase of a good would involve the receiving material and making a payment on the creating an obligation to pay to the supplier at the future date. Transaction could be a cash transaction or credit transaction. Then the profit, the excess of income over the expenditure, is called a profit. It could be calculated for each transaction or for a business as a whole. Loss, the excess of expenditure over the income, is called a loss. could be calculated for the each transaction or for the business as a whole. Then the assets. Assets is a resources owned by the business with the purpose of using it to generate the future profit. It could be a tangible resources like a land, building, factory, machinery and equipment, computer and vehicle. It could be intangible assets like a brand, value, copyright, patent, trademarks and goodwill. Fixed asset and a current asset. The fixed asset is a intentions of holding such assets is not for holding such assets for not to sell them out or to make a best possible use to earn the profit during the working life of the assets, while there are other assets held in the business for relatively shorter period which are called as a current asset. The small example related to the cash account has been shown. The balance are to be computed at the end of the accounting period. These balance are then considered for preparations of income statement and balance sheet. Let us see the example. This is a cash account. On the left hand side, it is a debit side, and on the right hand side, it is a credit side. The first entry is a cash brought into a business, that is 1 lakh. Then the receipt for a good sold 25,000. On the credit side, paid for the good purchase is rupees 50,000. Paid for rent 15,000. Balance at the end 60,000. This is a 1,25,000 total. It is called as a debit balance because debit side is more. It can be seen from the above example. The debit side of cash account shows the receipt of the cash into the business, and the credit side reflects the cash that has gone out of the business. Now we will see the types of account. We have seen that an account may be related to a person or a thing, tangible or intangible. While doing a business transactions that may be large in numbers and complex in natures, one may come across a numerous accounts that are affected. How does one decide about accounting treatment for each of them? If common rules are to be applied to a similar type of accounts, there must be a way to classify the accounts in the basis of the common characteristics. Please take a look at the following chart. The first one is a account. Accounts are divided into two types: personal account and impersonal account. Personal account divided into three types, that is natural person, active person, representative, and second account is an impersonal account, that is a real account, tangible and intangible, and the last one is a nominal account. Let us see what each type of the account means. The first one is a personal account. The account is divided into two parts. First one is personal account and impersonal account. Let us see about a personal account. As the name suggests, these are the accounts related to a persons. A1, these persons could be a natural person like a Suresh account, Anil's account, Rani's account, etc. The person could be also the artificial persons like companies, bodies corporate or the associated with the persons or the partnership, etc. Accordingly, we could have a Videocon Industries, etc. Infosys Technologies account, charitable trust account, Ali and Son trading account. There could be a representative of a personal account as well. So, although the individual identity of a person related to these is known, the convention is to reflect them as a collective accounts. Example, when the salary is payable to the employee, we know how much is to payable to each of them, but collectively the account is called as a salary payable account. Similarly, the example of are the rent payable, insurance prepaid, and then the commissions pre-received, etc. The student should be chance of errors more here. Then the real account, and the personal account is divided into natural person and the active person. And impersonal account is divided into a real account and a nominal account. Real account, these are the accounts related to the things or the properties or the possessions depending on the physical existence or otherwise they are further classified as follows: tangible account and intangible account. Tangible account, accounts that have physically existence and can be seen and touched. Example: machinery, stock, cash account. Then the vehicle. Intangible, real accounts, it represent a possession of a partners that have no physical existence but can be measured in terms of money and have the value attachment to them: goodwill, trademarks, patent, copyright, etc. The difference between the tangible and the intangible: tangible accounts can be seen and the intangible we cannot see. A nominal account, these accounts are related to the expenses or the losses and the incomes or the gain. Example: salary and wages, communication account, travel account, commissions received and loss by fire account. Illustration: let us see one example related to this the above subtopic what we have learned today. Identify the type of account for the following: cash account. You have to, what you have to do, you have to we have just now we have come across the accounts, that is personal account, then impersonal account. A personal account is divided into the natural persons, active person, representative person, and the second one is a impersonal, that is a real account. And the real account is divided into tangible and intangible and a nominal account. You have to identify the types of account, that is a personal account or the real account, and the third one is a nominal account. First example here it's given as a cash account. Cash account comes into the real account. Real account further divided into two types: tangible and intangible. Cash we can touch, and so that we can touch, so any items which can be seen or which can be touched, it's come under the tangible account. The rules for this is the real account. For the real account is that these are the account related to the things or the property or the possessions depending on the physical existence or otherwise, and they are further classified as follow: tangible and intangible. Tangible accounts, accounts which has a physical existence and it can be seen and it can be touched. So for this cash account we can see and also we can touch, so it comes under the real account, tangible real account. Second example is a Bank of India. Let us now apply the rules. Okay, so Bank of India is a personal account, whether it comes into a natural person, active person, or representative person. So let us see whether which it comes under which categories: personal account, real account, or the nominal account. First we have to see whether it comes under the personal account. As the name suggests, this account is related to the person, and this person could be a natural persons like Suresh, Anil's, Ram's, Rani's account, etc. So Bank of India is not a personal account, natural person's account. Then let us see about the person with the artificial persons like a company's body, corporate, or the association of a person or the partnership. Accordingly we have Videocon Industries, Infosys Technology, Charitable. It is not a company. There could be a representative of a personal account as well. So although the visual identity of a person is related to known as a conventions to reflect them as a collective accounts. Example: rent, payable, insurance. Bank of India is a personal account which is called as artificial persons like companies, bank account, etc. Third illustration is about a furniture account. Furniture account will come under which categories, that is a personal account, real account, or the nominal account. For the nominal account, if suppose we predict it comes under the nominal account, let us see the rules for the nominal accounts. These accounts are related to the expenses or the losses and the incomes or the gains, incomes and the gains, salary and the wages, communication, travel, commission received, loss by fire, etc. These all are comes under the nominal account. It doesn't come under the nominal account. Let us see whether it comes under the real account, furniture account. For the real accounts, these are the account related to the things or the property or the possessions, depending on their physical existence, or otherwise they are further classified as a tangible and intangible. Furniture is a physical objects and which can be seen, so it comes under the tangible real account. Fourth illustration is a salary account. uh, Let us predict which rules is applied for the salary account. First one is a personal account. It is not a personal account. It is not a real account, because salary, it cannot be tangible or the physical in. So let us see the nominal account. These accounts are related to the expenses or the income expenses or the losses, and the income or the gains. So salary and wages account, communication account, travel account, commission received account, loss by fire account. So salaries and wages are included in the nominal account. So the rules applied here, as a salary account comes under the nominal account. So we can write here as a nominal account. In order to solve these examples, we have to be thorough with this accounts. Like, accounts are divided into two types: personal account and impersonal account. Natural person, active person, representative person, and impersonal account, real account, tangible account, and intangible account, and further divided into the nominal account. So in order to solve this problem, you have to categorize them, whether it is suited to personal account, real account, or the nominal account, based on the rules they have already been provided to you. Let us practice more about this type of a problem. The fifth one is a Mr. Sunil drawing account. Mr. Sunil is a personal account, so we have to write here as a personal account. Personal account, it's a natural person. The sixth one is a interest on the bank deposit account. Which rules are here we can apply, whether it comes under the personal account, then the real account, or the nominal account. The interest on the bank deposit account, it comes, whether it comes as a personal account, no. Then real account, it is a tangible or intangible, no. Then it comes under the nominal account. So here we are writing as a interest on bank account is a nominal account. Cricket Club of India account. Cricket Club of India account. Can anyone tell me where in which category these accounts will come, whether it is a personal account, then the real account, or the nominal account? The Cricket Club of India account is a personal account, because it is an artificial person. Personal account. What about a land and building? It is a personal account, no. Then the real account, tangible or the intangible? Yes, it is a real account. It comes under the tangible account, because we can see, we can touch, and we can see. It is a real account. Then the investment account. In which category this investment account will appear, whether it is a personal account, no. Then the real account, yes, real account, because we have to investment requires a cash, so it is a real account. Real account. And the last one is a discount received account, in which categories it will appear. So discount received is not a personal account, not a real account. It comes under the nominal account. In in order to get this type of we can recognize this if we know the rules, which we have to identify which if suppose cash account is given, in which categories it will be coming, we have to identify it. So in it requires the identification techniques. Cash account is a real account, then the personal account or the nominal account, we have to identify it first. If you know this concept thoroughly, let us examine with this example, okay, the repairs and maintenance, whether it is a personal account, real account and nominal account. You have to justify your answer. Repair and maintenance, whether it comes under the personal account, it is a personal account, yes or no? No, it is not a personal account. Then the real account, it can be tangible or the intangible, whether it comes under the tangible or the intangible, we can see and touch. No, it doesn't come under the real account also. Whether it comes under a nominal account, yes, it is a nominal account. Why? Because in the nominal account in the nominal account these accounts are related to the expenses or the losses and the incomes or the gain. So the repairs and maintenance is the expenses or the expenses done by the business operator. So the correct answer is a nominal account. In order to know about this type of account and identify this type of account, you have to solve the more example related to such types of account. So here is some examples, okay, for you to solve in your home. So homework for you: identify the types of account. First one is a Maruti Udyog Limited account, stores and spares account, software expenses account, taxes paid account, salaries payable account, rent paid account. You have to identify the accounts which comes under the personal, whether it comes in the under the personal account, real account or the nominal account. You have to justify your answer. If suppose if you said the Maruti Udyog Limited account is a personal account, then you have to justify why it only comes under the personal account, why not for the real account and for nominal account. Thank you for listening to me and have a nice day ahead.